Thanks for asking me to expatiate more on this. Or to make it short, basically it's about you have an account with a broker of choice, an account, a real account, a demo account with a broker. You fund the account, and then what you do is to trade different instruments. There are several instruments that are actually available, like we have here. We have different currency pairs that one can trade, from the market, and you can make money. Basically, just take advantage of the information age. Maybe news wants to happen, take advantage of it. If you feel that pounds is going to appreciate against Canadian dollar, then you take a buy position. It goes up, you make your money. Right? If you think Canadian dollar will appreciate against pound sterling, you take a sell position. It goes down, you make your money. So, but I'm really pointing people particular attention to this crude oil thing based on coronavirus. Let's get to the chart of crude oil. As you can see here, this is crude oil. We call it WTI, West Texas Intermediary crude oil. Another version is Brent, which is the UK oil. So let me just quickly get a chart. What we now have, which I'll be observing, is that this stuff here is crashed, right? This is the beginning of this year. In just 3 months, it's crashed, right? The lowest level it has been since 1999. So what we are now saying is that we are increasing our baseline, buying up from here, and then you can see this place is a jump due to coronavirus, a sinking jump. So all these places will still have to be filled up by the market actually going back up to fill it up. Now, most of the companies, OPEC countries and oil producing companies, they are not satisfied. They are now selling below production price. So which means OPEC is doing anything to take the price up back, at least to break even price. OPEC, they don't have a choice. They have to find a way to bring this price back up, as the virus issue eases, and as companies start producing. Even if the lockdown will continue, after some time, the world will need production. So many production will commence and all that. They have to find another distribution channel for products. But basically, production will have to commence. And so oil price will have to go up. So we are looking at the oil price going up, this direction. So from here towards here, we're expecting the oil price to move back up, at least to the break-even production price. So they're advocating at least maybe $35 per barrel. So as that happens, we make. So we are just basically increasing our baseline, trying to see, increase our capital base, and then see how we can now start buying up, just to increase our capital base here, right? So, and as people that can get involved in it, so as the things start rolling in a couple of weeks, start going up in a couple of weeks, we start sharing, the profits. So information, you can still go online to read more about, Forex trading online, commodities trading. This crude oil now falls under commodities trading. Other commodities can include gold, silver, and all that. So basically, we are not holding the instrument in physical form. We are just, taking advantage of the changes in price of those commodities. So if you feel the price of the commodities will go up, we buy. And so as the price goes up, we take the difference. That's why we call it CFD, contract for the differences, which is is a major name, for it. So you just take the difference. If you think the price is going to go down, you take a sell position, what we call a short position. And once you take the short position, what happens is that as the price goes down, you make your profit. Let me take it further. Right now, as I'm here now, in the house, at times I trade from home in the office. Right now, as we speak now, look at my phone now. This is Tuesday, 21st of April. There is RBA meeting, Reserve Bank of Australia. They're having a meeting right now as I speak to you. This 1:30 on this chart now is 2:30 a.m. in Nigeria. So as they do this meeting now, it's about interest rate, that they want to either to cut interest rate or to, of course they will cut because of the pandemic. So nobody's increasing interest rate now. It's a bear market. So by 1:30, and as you can see also that they will also have a speech by the Reserve Bank of Australia. The governor will be having a speech by 5 a.m. So I look at that news now on my phone. I say, okay, something is about to happen. There's going to be a significant movement in the market. So I want to take advantage of that. I just come to my system and say, okay, New Zealand, dollar versus United States dollar, New Zealand dollar versus United States dollar. And you can see, as we speak now, based on that is happening, the is a bearish market, which means US dollar is appreciating against New Zealand dollar as we speak right now. This vertical line here shows the open of today. Today opened there, and so from the beginning of today, since 12 midnight, it first went up. Now it's going down as a result of this meeting. But you can see that it's a significant movement. It's very long because it's significant. This place there was no news, so it's just a sideways movement or consolidation. So what I'm going to do now is that I'm going to wait for that news to happen, see the impact of the news, and what I will just do, I can just take a sell position, and then I'm going to make some money. Maybe as you can see, it has also gone down further. It was here as at the last post video to you. It has gone down further. But funny enough and interesting enough, I may decide not to trade this. If I go to a higher time frame, for example, a 4-hour chart, I can see here two trend lines that are converging into a wedge. This trend line here, right, on a 4-hour chart, and this other trend line up here, two of them meeting here, converging into like what we call a wedge, shape of a wedge. So majorly, I've decided now the strategy I'm going to use to trade this is to wait for the breakout of this wedge. Once it breaks out of this wedge, that is a confirmation that it's going to be a bearish market. How do we know? Here, the trend line started out. It came here to try to test it. The margin here is very wide. It wanted to try to test it. It couldn't. But now it successfully tested it. And we now have what we call cluster of price actions. So the price action clusters here showing us that there's going to be a breakout. So the breakout comes out this way. That's a confirmation. I'm going to trade between this breakout and this next support line. So between here and here, that should be almost about 100 pips. I'm going to make some profit there. That's interesting. I think one of the things that even make it to be easier now is that we follow what financial institutions are doing. We don't try to force the market. The people that can move the market are the major financial institutions. They have power to move the market in any direction that they want to move the market. They just move the market in any direction they want to. But according to the law, they don't disobey the law. Then we try to force the market. That time some 10 years back, I want to place this in this direction, and then we lose money. But now what we do is just wait for the financial institution to decide on what they want to do, and that's what we do. And now we have more powerful indicators, more technical analysis, and then continuous learning. So we learn a lot of things. As you can see now, it's almost getting to that wedge. It breaks it, and that's a confirmation. That's what I'm doing. But if it doesn't break it, which is not powerful enough to break it, it goes up and break this one here. We take it. So that's just, it's as simple as that. Thank you, sir. I can see expatiate more if you want to.